Welcome to another amazing episode of Raising Private Money. I'm Jay Conner, the Private Money Authority, also your guest here on the show, or your host, I should rather say. But I'm so excited. The reason the word guest is on my mind is because of the guest that I've got today. My guest today here on the show has raised over $300 million in private money. And so just a little bit about his background. First of all, he is a private wealth advisor, and he's got this huge passion for helping individuals build wealth. Now, he's got a really interesting background. His background is running successful family establishments, specifically in the restaurant and the hospitality industry. And then he made this huge transition into finance. And that's all driven for a desire for fulfillment. And he recognized the actual gap in this industry. Now, in addition to that, one of his expertise is knowing the ins and outs of actually how 1031 exchanges work and this thing called the Delaware Statutory Trust. And so if you've never heard about, particularly that second strategy, then we're going to pull the curtain back on that. He's also an expert in estate planning and wealth management as well. In just a moment, you're going to meet my special guest, Mr. Frank Hanna, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Well, hello, Frank, and welcome to the show.
Thanks, Jay. Excited to be here.
Absolutely. So excited to have you, Frank. And first, let's talk about, since this is the Raising Private Money show, let's talk about your journey as it began with private money and talk about that a little bit, how you've gone about raising so much private money for your real estate deals and et cetera. And then we'll segue over into your expertise. So one thing that I've discovered, Frank, over the years is that investors have something come along in their life that changes or triggers the trajectory of their business. And they have some kind of revelation as to, you know what, I need private money for my business. Tell us how you got involved in private money to begin with.
Well, as you alluded to in the intro, I grew up in the restaurant hospitality business through some family-owned companies. And due to some of the successes we had there, we got into fixed financing or private lending for entrepreneurs that were looking for that kind of private capital. And that kind of segued into our own real estate development. And we were building our own portfolios of assets in different asset classes. And we had a lot of people coming to us for more traditional fixed financing. So that's kind of where the light bulb went off and said, hey, you know what? If we can do this and we have a little bit of expertise in real estate investment and management, how can we be a resource hub for all size investors to be able to participate in different capacities, whether it's on the private lending side of things or just, private equity, crowdfunding, real estate syndication. So we became kind of a focal point in our little market to start for people that were either looking for financing or wanted to participate in real estate investment, but just didn't know where to start. So that's kind of how we got into that space to begin with. And then we built kind of a hybrid financial planning consulting business and, kind of had that, set aside right next to our private real estate investment programs.
So really how you started in private money was being a private lender yourself.
Yep. Yeah, we called ourselves the Bank of Frank, and it was real small town and low key, and people still joke about that, but that's really how we started. We had local entrepreneurs and investment people that were coming to us for private investment. And that's where it all began.
I got you. And so then, as you said, you did that for a while, and then you started opening it up to other
Mhm.
individuals that might want to become investors and private lenders as well. So how did you launch that to where you could go about and find other people that wanted to be investors and wanted to be, private money lenders?
Well, as I said, so when we got into like the first kind of phase of like our real estate, creation, development, investment programs, we had a lot of people that were coming to us for that. And then on the same side of things, we had some pretty good wherewithal and some good counsel and relationships that were helping us from more of a traditional financial planning, um, you know, segue. So when those two groups of people kind of came to us in two different directions, it allowed us to be kind of a matchmaker, for lack of a better term. The people that were coming to us for more, financial, tax planning, trust planning, asset protection type stuff, those people all of a sudden said, "Hey, wait, you guys do real estate investment as well. Let me see what some of those deals look like." And then we had people that were coming to us for private financing, or, "Hey, I've got capital, I'm looking to, do real estate investment." They also were able to tap into some of our, more traditional financial, advisory services.
Right. Well, your background is restaurants. Mine is too.
Oh yeah,
I only survived 2 years. That's all I could take. I couldn't take it.
that's still impressive.
I couldn't take it anymore.
It,
Um,
it, it is tough.
so what was it that made you decide to leave the restaurant industry and move over into being a wealth advisor?
I just, I always say it takes a special type of person, or somebody that's got something, wrong with them, to be wanting to jump into the restaurant business. And I've got all the appreciation and respect in the world for people that are successful in that. But, my father started in that and knew he wanted to do that since he was 12 years old, is what he told me. And I just didn't have the passion that he did. At one point in time, we had 15 different restaurants. I was managing 3 restaurants. I did that for 15 years. And at the end of the day, I realized I was never going to be as successful as he was in it. And I just wasn't passionate about it. And I ended up not enjoying life and kind of resenting the fact that I felt like I was stuck. So again, along the way, I had picked up a couple tools as it related to, financial planning, tax planning, real estate investment. And I had a lot of good relationships. And I said, look, I think I could be a really good resource hub for the fast moving entrepreneur, to be able to, not be jack of all trades, master of none, but hey, if you have a question or need a resource or need a solution, if I can't help you directly, I know what direction to point you in.
What you just said reminds me of a word that I have come to learn is really foundational when it comes to raising funds, being a connector, et cetera. And that's networking. And so when you started branching out away from the restaurant industry and the restaurant business, how did you start either communicating with your network about opportunities to invest in, or how did you, if you needed to, how did you end up starting to grow your network?
So in the beginning, I raced out to anybody that would listen and said, "Hey, look, this is what I'm doing now. I've reinvented myself, and, I'm motivated and determined to kind of build this." And in the first few years, a lot of the people I was, speaking with were skeptical, so they wanted to see us kind of build something, get some financial scale, have some successes, and make sure that we could stay in this business and sustain long-term success before they were willing to, really give us a shot, or, invest with confidence. So, we went out there, and again, and I still do this to this day. I just market 24/7. I talk to anybody that'll listen. We've got many different tools in our toolbox. And I say this to everybody that I talk to, and I'm 100% confident when I say this. If you give us the opportunity to meet with you, understand what you're working on, what's important to you, what your goals and objectives are, there's 100% chance that I'm going to be able to show you an idea that's going to either create value, make you money, save you money. There's going to be something that I can show you or introduce you to that's going to, put you in a better place than before we met. So I just run around constantly. I learn along the way, and we've built really good relationships that have improved over time. So whatever it is you're looking for, if it's, on the real estate side of things, I know who the major players are across the country who've got the longest standing track record, best success, strongest financial scale. And we've worked out deals to, be able to partner with them to bring some of those sophisticated opportunities down, from the larger investor down to the quote unquote smaller investor.
Right. How would you describe your ideal client that you work with and that you're looking for?
I always say we look for quality versus quantity. Oftentimes the more complex the situation or the more assets that are there, we can potentially make a bigger impact. But I just look for quality individuals that are easy to work with, who have like-minded goals like I do. And whether you're making $100,000 a year or $100 million a year, there's going to be something that we can show you that's going to, again, improve where you are currently. And due to the heavy duty due diligence that we've done over the years and the time and energy we put into kind of vetting the marketplace, so to speak, we've kind of taken on that risk to put our best foot forward to give those smaller investors access to different things that we're working on. So we don't discriminate, on size. So I'll talk to anybody that's out there that is in a position to potentially invest. I'd say most of our deals have thresholds of, there's some discrepancy with this, but I'd say most of our deals have minimums as low as $50,000.
Right. Well, and when I'm teaching my new private lenders, private investors to invest in our deals, that's my minimum as well.
Yep.
50,000. I mean, it costs me the same to get the deal closed with the attorney, whether it's 50,000 or 5 million.
Exactly. Yeah. So you try to do, and we spent a lot of time on this, and I'm sure you did too. You want to really be able to pass that value on to the investor, but you can't compromise, all your costs and everything there. So you got to make it work for you as well as the investor. But I think when it's all said and done, that's a relatively low threshold to get access to some sophisticated deals. Some of the big players that are out there don't want to talk to you unless you've got, $5-10 million.
That's right. Just in case any of our listeners or audience need to jump off early and can't stay to the end of the show, yep. Frank, go ahead and give out the best way for them to contact you or your website and learn more about the investment opportunities that you have. Sure.
So my email is Frank Hanna, spelled FrankHanna @ REV as in Victor, X as in X-ray, wealth.com. And the URL of the website is the same, revxwealth.com. Shoot us an email. We have sample deals that are on there. It's a very, small portion of our overall deals, but you can kind of get a flavor for some of the things that we're working on, and happy to set up a call, respond to an email. We have all types of different deals that have different tax advantages, shapes, sizes, different things that you're looking for. So again, confident there'd be something we could introduce you to, even if the timing's not perfect.
Sure. And we'll have that email address and the website as well in the show notes, and we'll also get that again out at the end of the show. So one area that you and your team are really, really good at, Frank, is tax management, mitigating taxes, saving taxes. So what are some common myths? What are some common, let's say, misconceptions about tax management, and how can people navigate them effectively?
I think there's all different opportunities that are out there, and I think what scares people is kind of allocating too many dollars towards different real estate opportunities or even retirement plans where they can't necessarily touch that money tomorrow. So what I see is people just getting so caught up in what their perceived liquidity needs are, or their rainy day fund is, that they end up keeping too much capital in those buckets, and then they missed opportunities and they end up paying Uncle Sam a lot more than they could or should. So it's really, again, about education and really walking through somebody's, goals, objectives, all the things that they have going on, to really determine, all right, how much above and beyond what are your absolute, needs throughout your family and your life, what else is left? And then what can we do to kind of nudge you in a positive way to kind of get those dollars allocated to mitigate some of those taxes, and then use those dollars to continue to grow for you, produce passive income. And I do it myself. That when I first got into this, I had a comfort zone, and I had to really push myself and say, okay, what are you willing to save each month towards these goals? And, that dollar amount is transformed over the years. But there's a lot of things I've been able to do. And I wouldn't have been able to do that had I not kind of drawn that line in the sand and say, hey, this is something I should pursue. But it's all about education, having the right advisors or, mentors that can kind of guide you through that.
For sure. That makes a lot of sense. We're in a very, very interesting market, aren't we? Stock market's all over the place,
Yep.
for some time. Interest rates, we've never seen what the Fed has done recently in history as far as, the raising of rates. I don't have a crystal ball, but I got some good friends that do. I think I know where we're going to see interest rates going over the next 12 months. But, people in general have a concern about particularly what kind of decisions they should make, what kind of smart investment decisions they should make in a rapidly changing economy like we're in. And what's the way for people to stay informed and to really know what's the truth about what's going on?
Yeah, no, I totally agree. And I think that, whether it's the Fed doing kind of the unprecedented over the last few years, or, just tax law in general, you can never, the target is constantly moving, right? So, we joke and say people get analysis paralysis, right? So you're always waiting for the perfect time. It's going to give you the perfect game plan that you can, run with for the next, several years at least. And you just never know, right? So you have to plan within the guidelines of the tax law and what interest rates look like. And again, diversification is king. And, again, I feel optimistic about some of the things that could happen here in 24, but, you never know until you know. But that's where I think, planning for, the proper, or planning with the proper tax laws that are in place right now are critical. There's a lot of things that could go in a variety of different directions depending on, who's in the next administration. So that's why I say, hey, plan for today, swing the bat today, because that bat might be taken out of your hands in a year or two.
That's for sure. So, speaking of crystal balls, Frank, is there any kind of like new economic trend or new opportunity that you've noticed, that's coming along, that you've, shared with your clients that you have now to help them succeed with what they've got going on?
Yeah, I keep talking about taxes because they get me excited. No, I'm just kidding. But I
Hey,
think
the taxes got me excited when Uncle Sam told me actually my CPA told me the check that I had to write back in October.
yeah, no, seriously. One of my things my dad taught me early on is it's not what you make, it's what you keep, right? So you could have the biggest, gross salary out there, but once you get done with the tax man, it might not look as hot. So, we, again, are always focused on tax planning, and that's kind of, not only on the real estate side of things, but also like our financial planning side of things. So, one of the things that's changing that, pertains, I think, to real estate investors is, bonus depreciation or, accelerated depreciation, whatever you want to call it, as part of Trump's Tax and Jobs Act of 2017, we were able to get 100% bonus or accelerated depreciation. So when you invest in certain types of assets, you could take that depreciation schedule that's typically drawn out, from 20 to, 39 years, and take those tax breaks or the depreciation over time. But for certain types of assets in certain segments, you're able to push all that, depreciation fast forward and get a substantial tax deduction in year one or the first few years. So we do a lot of deals like that. So for real estate investors that have active income, they can participate in those type of deals, or individuals that just have a substantial amount of passive income. Those can be very impactful. And last year was the last year of 100% bonus depreciation. We just wrapped up a deal for 80% bonus depreciation. Next year, it's supposed to go to 60 to 40 to 20 and then 0. So those opportunities are going away unless Congress votes on extending that, changing that, but they can't seem to agree on anything. So again, rather than guesstimate or save my dollars to cross my fingers and hope things are going to get better in a few years, I'm rolling with what I know is accurate right now. So we just raised a substantial amount of money for those type of investors here in the latter part of 2023. We're going to do another program in the fall of 2024. There's opportunities there. And then, I would say on the 1031 exchange planning type of thing, that's been around forever. So most people are aware of that, but there's some different planning solutions that go along there that some people are taking advantage of.
That's wonderful. Well, I tell you what an amazing resource, Frank, that you are, for your clients. I think one of your main asset classes, is it still the multifamily, self-storage and hotels?
Yeah. So we invest in most asset classes. I'd say the only thing we're not really participating in is office. So, we do multifamily, self-storage, student housing, hospitality, mostly hotels, industrial. So at any given time, sometimes we'll lean one way or another depending on what's going on, but we still do have, I'd say really attractive deals in all those asset classes.
Gotcha. Well, Frank, one more time, please give out your website, your email, best way for folks to contact you and continue the conversation as to how you can make an impact in their financial future.
Sure. So my email is Frank, Frank, Hanna, Hanna, at revxwealth.com, and URL is revxwealth.com. Feel free to shoot me an email. If you go on our website, there's a lot of good informational material there. There's sample deals that we have access to currently that could give you a flavor. But by no means is that even close to the total amount of deals that we have going at any even given time. So feel free to reach out at any point.
That's fantastic. Frank, thank you so much for joining me.
Thanks a lot. Appreciate it.
All right, you got it. There you have it. Another amazing episode of Raising Private Money with Jay Conner. I'm your host, and I want to thank you for taking time to join out with us. If you happen to be listening on iTunes, be sure and follow me, Spotify, and any of your other popular platforms. If you happen to be watching on YouTube, be sure to subscribe and ring that bell so you don't miss out on any upcoming episodes as well. I look forward to seeing you right here on the next episode of Raising Private Money with Jay Conner.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/money guide. That's jconner.com/money guide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconnor.com/money guide to get your free guide. We'll see you next time on Raising Private Money